What is going on with Sofi stock right now? The stock price makes it look like the business is doing badly, but this is completely wrong. In fact, the business is doing better than ever. This is a must watch video. I will be looking at why Sofi could be one of the best bank stocks over the next few years, and as promised in my last video, I will be diving into the financials to see what the hell is going on. Before we get into the video, I want to thank all you guys who have recently joined the channel in the past few weeks, and congratulations on the massive recent winners that we've had. You have earned it. Over 1,000 new subscribers in just a week. But surprisingly, 90% of you are still unsubscribed and still missing out. Fix that right now, subscribe to the channel and hit the bell notification so you don't miss out on any new content like this. If you find any value in this video, can I ask you to smash the like down below? It literally costs nothing, but it helps me out so much. I'm aiming to get 400 likes on this video. Help me hit that goal. I want to point out that I'm not a financial advisor. This is not financial advice, so always do your own due diligence. Now, there's a lot to discuss, so let's get straight into it. First of all, what is Sofi and how is Sofi different from normal commercial banks? So Sofi is a fintech that offers a range of lending and wealth management services. The company primarily caters to early stage professionals and offers variable and fixed rate, parent, personal, and MBA loans, mortgage refinancing, and more. They create modern financial products and services that help people borrow, save, spend, invest, and protect their money better so they can achieve financial independence and realize their ambitions, which could be owning a home or saving for retirement, paying off their student debt, and much more. So Sofi is a fintech company that is positioning itself as a one-stop shop for all your personal finances. Now, I see so many people commenting on Sofi, calling the company a startup and treating this like a company that was just founded at the beginning of its growth. But Sofi was founded more than a decade ago in 2011, and a lot of people seem to be thinking that this company has only really existed since going public less than 4 years ago. But the fact is that this company was a decade old before it was listed on NASDAQ. It's still a growth company with huge potential and still at the very early stages when you consider a banking and where you consider digital banking is at the moment. But this is not a risky startup that is only in its very, very beginning. This is well established. And fintech is one of the most promising megatrends which will disrupt the way we go about obtaining financial services. So considering the promising fintech industry's prospects, together with Sofi's strong execution, I think that the company is poised to become a notable player in the evolving banking industry. Sofi stock is considered by many as a strong buy because the stock looks deeply undervalued from the forward PE perspective and when compared with other fintech companies. So as I said a moment ago, if you've not been following the company over the past few months, you might think that the stock is dropping because the business is doing badly, but this is not the case. When we look at the most recent investors presentation, this presents a very different picture of the company. In fact, this is a company that is doing extremely well with regards to almost every sector of the business. New member additions have increased every single quarter since the company first went public, and so too has new product additions, which is increasing at a rate of 41% quarter over quarter. And if you consider the effect of year-over-year compound growth, you will see that in just the last quarter alone, there was 695,000 new products, which is close to the entire full year 2020 growth rate. So in real terms, the company is growing now per quarter what it used to grow in an entire year. But this is also very important from another perspective. They have a lot of new members, but they also have a lot of new products that they can provide to their members, which gives Sofi the opportunity to cross-sell its products. Now, this has a lot of benefits. Like they can cross-sell products to existing customers, which means they achieve additional revenue without spending a cent in additional costs. So just think about this from a fundamental point of view and a financial point of view. In very simple terms, revenue goes up while costs come down. This is exactly what you want to see in any business, not just in banking, not just in Sofi. Any business that can increase its revenue while decreasing its costs is onto a winner, which is why its lending and financial service products are all up too. The company has posted their best returns to date. On the financial side, things are just as impressive, with the quarterly adjusted net revenue increasing every single quarter. But then look at the adjusted EBITDA. where there is an incredible improvement. Going back only 2 years ago, this was $9. However, in the most recent quarter, we have $181 million. These numbers are insane, and this is reflected in the annual figures too. Looking at the latest financial statements for SoFi, we can see that they have an incredibly strong balance sheet. The company has total assets of over $30 billion and total liabilities of $24 billion. SoFi have cash and equivalents totaling over $3 billion and total stockholder equity of $5.2 billion. So overall, this is a very strong balance sheet, looking at it from a macro point of view. Assets in general outweigh liabilities. Current assets exceed current liabilities. So there's absolutely no issues with liquidity or anything like that. The only thing that I don't like to see in financial statements is a goodwill figure, because this means that a company has paid more for an acquisition than its actual value, which usually tends to hit the profit and loss later down the road. So SoFi has a goodwill here of $1.3 billion. Now in this case, the goodwill is largely attributed to the acquisitions of Wyndham and Galileo, and this has been highlighted by the auditors as a critical audit matter. Deloitte and SoFi have performed an interim quantitative assessment on the Galileo reporting unit, and as a result of this assessment, the fair value of these reporting units were determined to be below their carrying value by 9.9% and 14.8% respectively, resulting in management recognizing goodwill impairment charges of $124 million and $122 million for Galileo and Technisys reporting units respectively. Now, this is something that I'm usually very wary of. I don't like seeing goodwill because I don't like the idea that a good business is overpaying to acquire other businesses. Because I don't like the idea that a good business is overpaying to acquire its assets. I usually think that a well-run business will be able to spot opportunities in the market to be able to make their acquisitions at a discount to market value, not making them at above market value. But a bigger picture needs to be looked at here. As I already talked about, SoFi is not just acquiring these businesses, but they are also acquiring the customers and have acquired cross-selling opportunities. And this is what is driving new members, new product additions, and ultimately improvements in the quarterly and annual performance, not just the bottom line figures, but look at the margin on this. In the last quarter, the adjusted EBITDA almost doubled, where revenue increased by about 10%. And those margins are huge, a 30% EBITDA margin, but importantly, the company is achieving its best margins when the revenue is at its highest. Now, the other thing that stands out to me on the balance sheet is the debt figure here, but I want to talk about the profit and loss before I talk about how this debt has changed recently. Looking at the income statement, we can see that SoFi have greatly improved the revenue quarter over quarter and year over year, achieving a total net revenue of $2.1 billion for 2023, $2.5 billion for 2022, and $1 billion for 2021. And we've seen that too in the investors presentation earlier. We can see those huge improvements to the EBITDA over the past 5 years. But now this is where a lot of people seem to be getting confused about SoFi as a company. There is a net loss for 2023 of $300 million, which is only slightly lower than the net loss of $320 the year before. Now, revenue for the year was $1.5 billion in 22, but the loss has stayed the same despite revenue increasing by almost $600 million. And this brings the opportunity for bears to talk shit. Opportunity for analysts to downgrade the stock despite everyone seeing the huge progress that SoFi have made, and this has provided the opportunity for certain people in Wall Street to talk crap and buy stock at low prices. However, this needs to be addressed. I talked about goodwill a lot a moment ago, and that was because of its effect on the profit and loss for the year. As we can see here, the main reason for this net loss is this goodwill impairment of $247 million. Without this, SoFi would have been down to near break even for the year. And as we know, in the last quarter of 2023, SoFi did in fact turn profitable for the first time in the company's history. The corner has been well and truly turned when it comes to SoFi's financials, and this goodwill impairment is simply the last time we should see a loss like this. This is a one-off charge. We didn't see any goodwill impairments in 2021 or 22, And to be honest, we are unlikely to see an impairment again in 2024 or maybe even 2025. But now going back to SoFi's debt of $5 billion for just a second, there may be a portion of this that has already been paid off. Back in March, SoFi announced that it had priced its private offering of 1% convertible senior notes due for 2029 for a total amount of $750 million. Now, as it says here, the notes will be sold in a private offering only to persons reasonably believed to be qualified institutional buyers. And further down here, SoFi estimates that the net proceeds from the offering will be approximately $735 million to redeem its 12.5% Series 1 preferred stock and for general purposes which may include repayment of higher cost debt. So SoFi will use the proceeds of this offering to pay off debt at a much higher rate. The offering is for notes at only 1.25%, but what's very interesting in my opinion is the fact that notes are sold to persons believed to be qualified institutional buyers. Now I made a video a few weeks ago where I made this point. These institutions, these Wall Street analysts, have been downgrading SoFi stock for months, and it feels manipulated. Like, look at this. Morgan Stanley dropped their price target to $6, and Wedbush issued a $3 price target at the beginning of last month at the same time as this announcement. Then, within a matter of just days, we have new price targets of $12, $10, $11. Although these might not seem like a lot, there is a huge difference between $3 and $12. That is 4 times the targeted share price. That is a crazy swing in just a matter of days. So the question remains, is SoFi being manipulated by Wall Street and why? Is it to get the stock cheaper? And how far do you think that they will go? And are they manipulating other stocks too? Leave a comment down below. As a SoFi investor and as a viewer of this channel, I want to know your thoughts on this matter. Now in this video, I had planned to analyze into future projections to see where SoFi is going to be within the next few years and what my price target is for 2025 and 2030. But it took longer than I thought to discuss the current situation. If you want to see an analysis of SoFi stock with future projections and my price target for the next few years, then drop a comment below. As soon as I get 400 likes on the video, I will do a SoFi analysis with my price prediction for each of the 5 years. In my opinion, there's a lot to be bullish about both in the short term and long term for SoFi investors. This is of course just my opinion, it is not financial advice, but always do your own due diligence. And I've been asked a lot recently to look at some other stocks, such as Palantir, ticker symbol pltr, and obviously Robinhood and PayPal also come up a lot in the comments. So if you would like to see a video where I look at these stocks in the same manner as I have looked at SoFi over the past month or so, then make sure to leave a comment below. Remember, I'm not a financial advisor, but if you enjoyed this analysis, then please like and subscribe. I hope you make a load of money on this stock. Follow me on Twitter and I'll catch you in the next video.